Good morning. Good morning. Our participants, investors joining us via the web, representatives of the media, analysts and shareholders, fellow NCB colleagues, ladies and gentlemen. Welcome to Investors Briefing. I will be sharing details of our performance for the full financial year 2018. I'm Dennis Cohen, Group CFO and Deputy CEO, and I'm joined by Mr. Patrick Hilton, our President and CEO. As usual, I'll be reviewing our financial performance and some business highlights, after which our President will share his perspective on 2018 and his view on the way forward. It is with great pride that I share with you another record performance for our group. Yesterday, the group reported net profits attributable to shareholders of $28 billion. Which is a 46% increase over the prior year. This is by no means a small accomplishment, and I wish to thank all our stakeholders, in particular our staff, for their commitment and dedication throughout the year, and also our customers for giving us the opportunity to serve them. We continue our customary consistent dividend payments, and at the meeting of our Board of Directors yesterday, we declared an interim dividend of 70 cents per ordinary stock unit. The dividend is payable on December 7, 2018, for stockholders on record as at November 23. This brings dividend for the year paid a total of $2.80. The total shareholder return for 2018 is 46% when combining the dividends paid with the share price appreciation over the one-year period. The closing price as at September 30, 2018 was $124.52 compared to $87.02 as at September 30, 2017. These strong results are driven by a $17 billion increase, or 29% increase in operating revenues. The group has delivered these results through organic growth in revenues stemming from the increase in loans and transactions at our electronic channels. The strong revenue growth in our retail and payment segments continue to be driven by innovation as we expand our digital solutions. We continue to expand the payment options offered to our electronic and card channels. And these channels expand access to our customers at a low cost as we maintain a robust cybersecurity program. We have also benefited from increased gains on foreign currency and investment activities. We continue to be proactive in managing the key market factors while optimizing our balance sheet and profitability. This we do while maintaining a robust risk management framework. Our revenues are also positively impacted by our expansion activities, which led to the acquisition of our newest subsidiary, the Clarion Group. The fourth quarter profit of note is the second highest in our history. $7.3 billion, topped only by the first quarter of this financial year, and this first quarter would have included a gain of $4.4 billion for the negative goodwill on the acquisition of the Clarion Group. The increased profitability resulted in an improvement in our key financial metrics. Specifically, return on assets has increased to 3.3%, up from 2.9%, while return on equity increased to 22.7% from 17.4% in the prior year. And whilst our cost-income ratio remained flat for the financial year, the cost-income ratio for the first quarter has declined to 62.1%, down from 66.1 in the prior year's fourth quarter. Now examining some of the details of our core financial performance, as previously mentioned, operating revenues grew by $17.1 billion or 29% to $76.5 billion. Operating expenses also grew, up by 31% or $12 billion to $50.4 billion. We increased the average compensation for our local entities by 8%, which would have contributed to the increase in staff costs. We continue to make significant investments in human capital and increased training and competency building to change and enhance our group capabilities. Staff costs were also impacted by the consolidation of Clarion. We view our staff costs as amount spent as an investment to ensure our future growth. Additionally, our depreciation and amortization costs have increased by 47%. Necessary investments again to improve our infrastructure, respond to our changing customer needs, and support our business transformation and future growth. Our commitment also extends to our communities, nation building and economic growth, and in this regard, we spent $8.5 billion in corporation assets and irrecoverable general consumption taxes. Our policyholders and annuity benefits and reserves also had significant increase, and these costs are to ensure funds are provided to support our customers in their time of need. Now shifting to our business segments. We have never before had any business segment having operating profits in excess of $8 billion. And I'm proud to say that for this financial year, we had 3 business segments exceeding $9 billion. Internally, in what we consider to be a bit of a photo finish, our Treasury and Correspondent Banking segment, led by Tanya Watson-Francis, continues and consistently the #1 segment within the group. And for this year, our Life and Insurance and Pension Management segment, headed by Vernon James, was #2 with total operating profits of $9.5 billion. Our Wealth Management segment, headed by Steve Gooden, was 3rd with operating profits of $9.2 billion. We should probably clap them. Treasury and Correspondent Banking segment achieved a 20% growth over the prior year in what I'd say is a very competitive environment. This was driven by increased gains on foreign exchange and investment activities. Our Life and Insurance segment recorded a 110% increase over the prior year. And Vernon will tell you this was due to portfolio optimization and improved premium income. Our Wealth Management segment also experienced significant growth, increasing 54% over the prior year. Here, I'd say to you that high levels of liquidity and a declining interest rate environment supported a high demand for assets for which they would have benefited. Our Payment Services segment grew by 27% to record operating profits of $2.9 billion. We have invested significantly in our card business to offer safe and alternative payment options, and these transaction volumes within this business continues to grow. Additionally, we have started using EMV chip card technology to better protect our cardholders. Our Retail and SME segment contributed operating profits of $2.8 billion, an increase of 2% over the prior year. This is the core of our local commercial banking business and continues to be the main contributor to operating revenues earning $25.4 billion, an increase of $6.6 billion, or 35% over the prior year. Our corporate banking segment recorded a commendable performance of $3.4 billion, up 1% over the prior year, while our general insurance segment achieved operating profits of $1.1 billion. As I would have mentioned in previous briefings, this segment would have been adversely impacted by higher claims expenses in the first quarter of this financial year. Our growth and profitability is supported by a strong asset base, which has grown substantially over the prior year, primarily as a result of the consolidation of Clarion. Our total assets at the end of the year increased by 41% to $979 billion, or I should say $21 billion short of $1 trillion. The group's equity was $130 billion, increasing by $14.2 billion, primarily as a result of retained profits. The main earning assets continue to be investment securities and loans, and our investment securities remain the largest asset group with $390 billion, with net loans a close second at $373. These assets are primarily funded by customer deposits and repurchase agreements, and our customer deposits grew to $485 billion, while repos at the end of September stood at $153 billion. Looking at our capital position, we continue to be well capitalized, and our capital ratios are above all regulatory requirements for all our relevant entities. I will now share with you some of our key business highlights. With the increasing occurrence of cybercrime globally, digital consumer protection continues to be a top priority for NCB. Even though criminals devise new ways to commit cybercrimes every day, we stand ahead of them by continuously improving the reliability of our network and security of our customers' accounts. Since 2016, we have invested over $2 billion in global technologies and certifications and added a number of advanced security features to our fleet of ABMs and bank-on-the-go kiosks. Some of these investments include upgrading close to 85% of our ABMs, with the remaining fleet to be completed in this financial year. Improved video monitoring, issuing EMV chip and PIN credit cards, implementing RSA Secure ID, a world-class dual-factor authentication technology to enhance protection of our customers' online banking accounts. Most of you would have been aware of us sending text messages to alert our credit card customers of transactions that they've completed. Certifying our credit card-related systems, including point-of-sale machines, with global payment card industry data security standards. We also continue to invest in fraud and analytic tools to help predict, detect, and prevent fraudulent activities on our customers' accounts, and approximately 75% of our customers adversely affected are reimbursed within 4 days, with the goal to get this down with a maximum of 24 hours. In the event that we suspect that there has been a compromise on any customer's card or an ABM point-of-sale machine on or off the island, we contact our customers and proactively capture or freeze the debit or credit card so we can protect them from any further compromise. Additionally, we are working to significantly improve the experience of visiting the branch for a new card. While we continue to work with the government and the law enforcement agencies to apprehend and punish cyber criminals, we encourage all our customers to stay actively involved in the protection of their own financial well-being. This means that as a customer, you protect your PIN number at all times, stay alert when using the ABMs and point-of-sale machines, monitor your transactions regularly via NCB online or mobile app or any other of our 24/7 bank-on-the-go intelligent ABMs and kiosks. Most importantly, do not hesitate to get in touch with us when you notice any red flags. Cybercrime is everyone's problem, and you can help. On the customer experience side, we are making an investment in upgrading our core banking platform, which will reduce downtime and give customers access to a fresh, modern online banking interface. Our Agile Labs continue to enable us to innovate quickly and develop new digital and customer-centric solutions. Our NCB mobile app, launched in July in the Google Play Store, now has over 60,000 downloads and is now available on iOS. All customers who have registered for RSA Secure can now utilize the NCB mobile app. We continue to improve the speed of banking with solutions like digital account opening, where a customer with a driver's license or a national ID can use a self-service tablet in branch to open an account in 20 minutes or less. Customers can also automatically renew their Advantage General Insurance policy or get quick access to funds when they need it with our pre-approved payday loan. Entrepreneurs and SMEs can also take advantage of our mobile point-of-sale device, which can easily be connected to our smartphone or tablet and used to carry out EMV keycard and multi-currency transactions anytime, anywhere. Furthermore, business customers get access to quick and convenient services like remote check deposits and so on. The only thing better than banking faster and at your convenience is being able to do it without fees. NCB is making it easier for our customers to do all this using NCB Online, the NCB mobile app, or any of the 24/7 bank-on-the-go kiosks and iABMs at our branches island-wide. Using these channels, customers can make free cash and check deposits and have it credited to their accounts within a few hours. Withdrawals of up to 100,000, as well as free bill payments and credit card cash payments, free balance inquiries, free fund transfers between accounts, and free mobile phone top-ups, just to name a few. Our Quiz mobile money solution allows customers access to an account with no minimum balance. With this solution, customers are able to withdraw and deposit cash at our ABMs, make purchases at merchants such as the Island Grill, Burger King, among others, pay taxi fares with online taxi company, top up your Flow and digital credit, and send money via text message to another Quiz account holder. Dormant fees are a thing of the past, as we are reminding customers that we have indefinitely suspended all dormancy fees. Our customers are the heart of what we do. We want to continue making banking easy, convenient, delightful, and affordable for everyone. We continue to invest in our communities through the NCB Foundation. And this year alone, we have committed a total of $135 million and more than 10,850 volunteer hours to a number of initiatives in education, community and development, and youth leadership and entrepreneurship. These efforts have earned us the Distinguished Prime Minister Medal of Appreciation for Service to Jamaica. Since inception in 2003, the NCB Foundation's overall investment in charity stands at close to $1.5 billion, with over $500 million of that being spent to education alone. Now, in its 11th year, Our annual flagship scholarship and grant program awarded a total of $40 million to beneficiaries, which includes 21 NCB scholars, 14 parish champions, and 7 icon scholars, and over 300 grant recipients. We continue to grow from strength to strength as a group, while increasing our ability to be our customers' full-service financial partner. This strength has earned us the 2018 Safest Bank of the Year Award for Jamaica from the Global Finance, which is a testament to the growth and capabilities of our group. Ladies and gentlemen, in closing, we are encouraged by our performance and growth over the years. And as we continue our transformation, we expect to maintain our market leader position. Our focus strategy will allow us to maintain our current momentum of what you'd agree is sustainable growth. At this time, I'd like to take the opportunity to thank again our valued stakeholders for the continued support. This has been a truly rewarding year, and we are certainly motivated to continue finding ways to become even faster, make things simpler, and make the NCB group even stronger. Again, we thank you for your continued support, and we look forward to another successful 2019. I will now invite Mr. Hilton to share his thoughts.
Thank you, Dennis. Let me join in welcoming those participating by way of the streaming on the World Wide Web, and also in welcoming those here present with us, members of the media, members of the analyst community, customers, friends, members of staff of the NCB group. The fiscal year or financial year just ended was one of a few important milestones, and in his presentation, Dennis would have mentioned several of them. Our financial performance for the year places us firmly among the top 5 financial institutions in the English and Spanish-speaking Caribbean. In fact, if we look at our year-end performance and we look at how others are trending, then our performance is likely, unless something exceptional happens, to put us among the top 3, potentially the top 2 in the region. You'll recall that a few years ago we had aspired to be among the top 5. So in a real sense, we are there. I'll also mention that our performance at the end of 9 months made us the most profitable financial institution in the English-speaking Caribbean for the first time. It has, ladies and gentlemen, been a remarkable journey from, first of all, becoming the top financial institution in Jamaica, and from there to the position we now hold in the region. I, too, would like to congratulate and express my gratitude to the staff of NCB, Team NCB, for making this a reality. I extend my deepest appreciation to our customers for allowing us to continue to serve you, to our board, to other stakeholders, shareholders, other stakeholders for your support. We are extremely proud to be able to share these performance highlights with you today. I want some energy. I like energy. Notwithstanding these performance achievements, NCB Financial Group remains in a continuous process of transformation and renewal. The unrelenting pace of change, characteristic of the 4th industrial revolution, requires companies and individuals to engage in a continuous process of learning and improvement. This is the only way we can advance and remain viable for the long term. A big part of our current transformation is scaling up the agile way of working in order to accelerate our digital transformation. In the year ended 2018, September 30th, we grew the number of agile teams to 15, resulting in several solutions for our customers. Mr. Cohen mentioned some of them in his presentation. We are also able, as he mentioned, to launch our mobile app, which provides our customers with another convenient channel for checking their balances and conducting transactions at the times most convenient for them. For those of us who use iOS and were initially left out, we are now fully included. And I'm on board. Other performance highlights I'll mention very quickly is NCB Capital Markets involvement in 30 capital markets and structured products deals across the region, valued at just under $800 million US. NCB Capital Markets arranged and brokered the 2 largest IPOs of ordinary shares in the history of the Jamaica Stock Exchange. They also arranged 15 billion Jamaican dollars worth of financing for the policy, the first of its kind for the Commission without a GOJ guarantee. And this is the second largest private placement ever done under the FSC's exempt distribution regime. NCB Capital Markets also did the first last year. So NCB Capital Markets had a phenomenal year, but they didn't have one quite as good as NCB Insurance. And so I know that Steve is intending to step up his game next year. And neither did NCB Insurance have one as phenomenal as Tanya did in Treasury and correspondent banking. So it's all out. As I reflected on the performance, ladies and gentlemen, I asked myself a question. So what do we owe this track record of success? What is it built on? What are the principles that have driven us in this direction and have enabled us to achieve these things? And in summary, I'll mention 2 things. I've spoken already about big, bold aspirations and how important these are. I have said it here previously, and I'll say it again, as I quote the words of Narottam Moti when he said that aspirations are key to driving success. Aspirations convert ordinary people into extraordinary achievers. But there's another component, ladies and gentlemen. Apart from big, bold aspirations, we also have high standards. And it is interesting because in reading Amazon's 2018 letter to shareholders, Jeff Bezos says, and I quote, "High standards are fun. Once you have tasted high standards, there's no going back," end quote. Insisting on higher standards is in fact one of the core Amazon leadership principles. I'm also here to inform you that high standards are core to NCB's DNA. And so we refuse to be defined by what is considered reasonable or possible for an indigenous Jamaican financial institution. Yeah? The high standards that we set for ourselves will continue to manifest themselves to the benefit of our employees, our customers, our shareholders, and our nation. And so as we move forward, ladies and gentlemen, we do so with the commitment to continued excellence. We do so with the intention to continue the pursuit of bigger aspirations and higher standards, and world-class is now our benchmark. Yeah? It is imperative that we do so because, in the words of Aristotle, and I quote, "We are what we repeatedly do. Excellence, then, is not an act, it is a habit," end quote. So in closing, I take another opportunity to thank you all, our employees, our customers, our shareholders, our board, all other stakeholders for your continued loyalty and support. I thank you in advance for continuing on this journey with us as we march to our full potential. Thank you, ladies and gentlemen.
We'll now open the floor to questions. Mr. Staple, welcome.
Mr. Chair, good morning to you and our CEO, Mr. Hilton, fellow shareholders and officers of the NCB Group. It is really a mouthful this morning. But first of all, I would like to congratulate Mr. Hilton on his award from AMTRAN. It goes to show when you are dedicated to a job, when you are dedicated to work, how the outside world and the associations that you're affiliated with can recognize the importance of individuals in our society. And we still have a Jamaica that is good, has a lot to offer us, and there are people here who are capable of carrying out the work the way it should be carried out in order for us to achieve the success that we want to achieve. Thanks to you, Mr. Hilton. I would like also to congratulate our employees. I was saying earlier on that I was in the country a couple of days ago, and I happened to visit Junction in St. Elizabeth. I saw a friend going in that I didn't see for a number of years, and I went after him into the bank. And while we were standing in the bank talking, I observed Mr. Hilton, the employees. They were so concerned about the customers who were inside there. They were diligent in giving the service, and I said to myself, when next I see Mr. Hilton, I have to point so to him that the employees at Junction, they did so well that I think it should be given to them. Congratulatory message should be given to them from all of us here that they are doing a good job and they must continue to do the work. Not to mention my branch at 1 to 7. Mr. Hilton, when you sit in that senior citizen section, sometimes you're reading the paper, but you're listening to what is happening. And our senior citizens are happy with what is happening at Northwood Boulevard. The technology, they are gravitating to the technology, and it is being used there. And I'm sure the workers there, Mr. Hilton, is giving us a good service that I don't think any other location is giving the service that 1 to 7 is giving. And I would say congratulations to them again. Mr. Chair, our technology, you have spent a lot, or we have spent a lot of money on technology. But yet still, from time to time, we hear in the media of what is happening as far as fraudulent conversion is concerned. How are we? Have we sat down and do a proper evaluation of what could be happening as far as the technology and fraud is concerned? Have we ever sat down and do a proper reconciliation to see exactly what we need to do to preserve this? Or to stop this?
You have another question, Mr. Steve?
Yes.
Yes. So we'll know that one.
Okay. Now, we bought Clarion Bank, and the bad debt was exorbitant. We see, for example, an impairment of about $4 billion. What are we doing to control or to eliminate that impairment?
That's
more questions?
Yes. I should have said first, Mr. Chair, in my congratulations, that this historical performance has been very good. I don't think any other institution in Jamaica can boast of this type of results. And I would like to take this opportunity to congratulate our staff all over Jamaica in their various locations on the wonderful work that they are doing. The cooperation you are getting, Mr. Hilton, from our employees is very good. And if you were not getting this cooperation, I am sure we would not have achieved this mark, this historical mark in our profitability. From what is it now, 59 billion to 76 billion operating revenue. Mr. Hilton, this this has taken a lot out of our employees. And I'm sure they're looking at it now and saying, we have worked very hard. What are we getting from it? And I'm sure they're going to fix them up, if you have not done so already. And they're looking to that fix up for Christmas. Mr. Hilton, what was a little bit disappointing to me, you have fixed up the top level, you have fixed up your employees, and you are giving good service to our customers. But the shareholders, Mr. Chair, you could have done, we could have been given a little bit better than the 70 cents. It was 70 cents last year at a historical profit, and another historical profit this year again, and we still get the 70 cents, Mr. Hilton. Please, I'm asking you, on behalf of fellow shareholders, of which some of us are sitting down here, I'm asking if for the next quarter, you could give us a little bit on that. You have fixed up the top, you have fixed up the employees at the top and the bottom, you have given them good service, you have given them good, good payback. I don't want to use the word payback, but for short of a better term at this point. Good payback, they are happy. But as shareholders, Mr. Chair, we are happy because when we look at the capital gain, yesterday it went up $4. So if you had sold all that you had with that $100 and odd, that would be good. The dividend, 70 cents, is good, but I'm asking you, Mr. Chair, if you could do something to help us with that. Increase that a little bit for us. Are you still interested in the offshore listing in the New York Stock Exchange, Mr. Chair? Is there any possibility of this happening? And also, I must ask, do you have any plan to close any of our locations? Whether they have historical value or not? Are there any possibilities of that happening? And lastly, Mr. Chair, Guardian Holdings. What is the current situation as far as Guardian Holding is concerned at this point in time? Thank you very much, sir. And fellow employees, thank you very much. And I would like for you to convey to your departments our appreciation of what they are doing and what they continue to do. And you, as head of the departments, must continue the hard work that you're doing. We appreciate it as customers and shareholders. We appreciate it. Management also appreciates it. And I'm sure if they don't, as I said, if they don't fix you up yet, they will intend to fix you up. Don't forget, Mr. Chair, that outstanding little outstanding amount for them, I would like you to fix them up. Because it is long outstanding years, and they're looking forward to that, to help pay down on the house or the apartment, or to defer some debt. So look into that, Mr. Chair, also, and make them feel a little bit more happy so that next year we can look at a 40-odd billion profit rather than 20-odd billion profit. Thank you very much, Mr.
Thank you for your mouthful, Mr. Staple. Just running through the points quickly. You made reference to the issue regarding cybersecurity. And I just want to assure you that we are always assessing and monitoring and responding and being as proactive. I think in my comments earlier, I even made reference to the kind of spend that we've actually made over the years. Cybersecurity is a journey. You will never, ever get to that promised land, so to speak, because the fact of the matter is that fraudsters are constantly innovating new ways to try to, to get around your systems. And the important thing for us is to ensure that we're constantly being proactive and continuously investing. And I think the numbers I quoted earlier should give you some assurance that we continue to do as best as we can to ensure our customers are protected. You made reference to impairment in Clarion. I'm assuming that you're referring to their loan portfolio or the loan balances.
Yes.
Right. For that, we have in fact incorporated Clarion's credit policies and practices within the NCB infrastructure, the NCB policies and governance and procedures. And I think that has gone away in lifting the credit standards and just a general management of credit within the Clarion Group. So we're positive about that going forward. We are not concerned about what the historical numbers were because we're actually quite optimistic about the way forward with the Clarion portfolio. In regards to dividends, I would probably want to correct you that last year at this time, the dividend was in fact 60 cents and not 70 cents. Last fourth quarter announcement we had here, and it was moved up to 70 cents at the end of the first quarter of the year. And we have in recent times historically made adjustments to the dividend payments in that quarter. So I would encourage you to look out for what happens in the next quarter, because that's when we have historically made adjustments to the numbers. The call for more dividends, we continue to note it. We had a discussion on that yesterday, and I think the whole theme really is that the fact is that growth requires capital, right? In order to pursue what we have outlined, in order to aggressively achieve the things we have committed to, it requires capital. And capital comes from us retaining some of what we earn to reinvest in our business, retaining some of what we earn in order to, to look at possible acquisitions which add value to the group. And our expectation is, and it has been the case based on numbers that I outlined, that the total shareholder return, we believe, will and continue to be positively impacted. Regarding the IPO, I assume you're referring to the listing in the US, the New York Stock Exchange. I think in a previous meeting we had indicated that we had discontinued that. That's not on our radar today, so we're not actively pursuing a listing on the New York Stock Exchange. Regarding branch closures, there are no immediate plans. We are constantly looking at our businesses and looking at ways we can best serve our customers as we implement new digital and electronic channels and the extent to which that positively impacts customer flow and the various other factors we continue to look at. But at this time, I'd say to you that we have no immediate plans, so rest assured there. Regarding Guardian, you want to take that one, Patrick?
The last status report I gave in relation to Guardian is what I'll be prepared to say publicly right now, that we have made significant progress, and our expectation is that hopefully in the not too distant future, we should be able to provide a public statement and more clarity on exactly where we are. Yeah? That's all I can say now, because we're under our process.
Any further questions, or Mr. Staples?
Page 11 of the report that you presented to us here. On the cash flow, what accounted for this repayment on the securitization arrangement from moving from 31 to $56 billion?
No, those balances, these are monies that we owe to investors. And the amounts are amortized over time, meaning that they're paid down in small portions, they're paid quarterly. So what you would have seen would have been the impact of the quarterly payments on the amounts that we owe. It's normal, it's typical.
And I know securitization is an important aspect for business. With it's an important aspect of our business, and we pay attention to that. So I'm glad to know that you have been able to do what you're doing with that. Now, the other portion is the movement of the proceeds from other borrowed funds. Proceeds from other borrowed funds move from 4.9 billion to 32.5 billion. Can you explain to us what was happening here, or what is happening here?
This statement, Mr. Staple, is really showing you the changes in the balance sheet. Right? These are not absolute numbers. Right? So in other words, at one balance sheet period, we might have an X, and it shows the movements. It is showing the movement that happened between the 2017 year, the 17 financial year, and also this year. To get a better clarity on these items, it's probably best to look at the balance sheet, because the fact is that we are funding the business with loans and deposits. We are funding it with repos. We are funding it with securitization funding, and the money is fungible, right? And these balances are constantly moving, and that statement is just giving an indication as to what kind of variations have taken place over the period. So I'd probably implore you to kind of focus primarily on the balance sheet items, which shows exactly what the balances are.
Okay, you mentioned about the dividends. I know that dividends are paid out of cash, basically. If you don't have the cash, you can't pay the dividends. But when I look, for example, Mr. Chair, retained earnings moved from 53 billion to $71.4 billion. And cash equivalent moved from 65 billion to $74.7 billion. Those two line items from which you would be paying your dividends, basically, and your investments. I know that without the retained earnings, etc., you will not be able to do some of the developments that you have done. Appreciate that. But with this magnitude of cash and cash equivalent, Mr. Chair, I am of the firm opinion that you could really look at that dividend payments, because cash and cash equivalent moving from 65 billion to 74.7 billion, that is money in our account, bank account. Am I right?
Yeah, that's money that we need to invest.
Yes.
It's not cash sitting around. I mean, it may be sitting in the account at a point in time, but these are funds which will be channeled into investment opportunities. Mr. Staples, cash is constantly coming and going. So you can have billions of dollars of investment securities maturing today, loans going out tomorrow. The status at a point in time doesn't give you a picture of where we are in terms of liquidity. Now, the decision regarding dividends is not based on cash balances. It's, as I said to you earlier, it's really based on capital, and it's based on what our plans are and exactly what are the capital requirements in order to achieve those plans. You know, so I'd guide you, I'd warn you against looking at cash as a gauge as to our ability to pay dividends. An organization can actually have tons of cash, but unable to pay dividends if they're at their limit. You know, so it's not a good guide. It's not a proper guide.
Okay. What can you tell us at this point? I know that there's something that you can't expose at some point in time.
I think you did
but
it already.
With this grouping that is here, what can you assure us of as far as future developments are concerned? What do you have on the table for 18-19? As I said, I know that there's something you can't expose at this time, but with this little grouping here.
Yeah, we've told you all we can tell you.
Tell us what is there.
Yeah, we've told you all we can tell you.
And we're not talking to just this little group in here. We're talking to the world at large.
Yeah.
So the point is that I think we have shared what we think is appropriate to share, and You know, just going forward, watch, wait, and listen.
I didn't get that.
You watch, wait, and listen. You will be informed in due course as things develop.
I know diversification is an important aspect. And I'm sure our group, NCB Group, Financial Group, believes in diversification. And without diversification, we would not probably have achieved what we did. So I am assuming, going forward, in that boardroom, a lot has been discussed, and I'm sure a lot will be seen, as you rightly said, wait and see. We are waiting patiently to see what new is coming up and how we are going to benefit from that new exposure.
All right, thank you. Thank you, Mr. Stephen.
Okay.
Morning.
Hi, morning.
Just some quick queries for clarification. Stephen Jackson, Gleno. Mr. Cohen, you mentioned that the fourth quarter was the highest, the second highest in history. Is it fair to say that this will carry over into the first quarter and the second quarter in 2019? If you look at page 12, the query on what precisely would have accounted for, sorry, page 8, what would have accounted for, there is a $6 billion change movement in, other comprehensive income. What would have accounted for that bracket? Or if it's just a tally. And on page 12, there is a huge movement in the life insurance segment. In terms of the total revenues, you spoke about NCB cap markets, and everybody sees what actually is happening in that realm. But what accounted for that big jump in revenue for the life insurance segment? I mean, that's massive. From 8 billion to the year before to 14 billion. All right. And of course, so that's one. And also on the same page 12, what accounted for the flat revenues of the general insurance. Right. So the general insurance is the only one that actually had lower revenues, as you realize. So I'm just trying to find out what's going on there. And just to follow up to Mr. Staples' comment on the IPO in the US, I'm just trying to get your view on stock splits vis-a-vis how foreigners will see a stock that's valued at over $1 when you convert it versus a penny stock. What's your thoughts on stock splits as it relates to how it's viewed internationally? And if there's any value to actually not splitting a stock when you're looking to actually get foreign investment. Thanks.
No problem. All right, the first item you referred to, the change in the OCI. Within that particular statement, what happens in that statement, it actually recognizes the actual value for shareholders. There are items for which there are items which are not accounted for in the P&L, and though not accounted for in the P&L, the OCI picks it up because it demonstrates the fact that the shareholder value has gone up, even though there has not been any change in the profit and loss. So for example, if we held a security and the value of that security has changed, and that security is held in a particular type of portfolio, and the gain didn't go to the P&L, it would go to that OCI statement. So even though the profit wouldn't have grown, you'd have seen a change in the net equity or the capital for the shareholders. In those instances, for example, having made the adjustment in the OCI, if, for example, that asset was sold, then having sold the asset and recognized it in P&L, you have to reverse it from the OCI statement so as to ensure that the balance sheet actually balances. So that's just movements between P&L and revaluation, equity change, which are not reflected in P&L. So those are constantly happening. No, not the GMBC. It comes about as a result of the discussions I had earlier regarding the gains in our investment securities trading. So it's actually driven by that. You made reference to the insurance business, the life insurance business. I'd mentioned earlier it has had a great year. I'd made reference to improvements in its premium income. They would have also have had significant annuity businesses. I think there's been all of these things have helped to grow the income line for that business. I think there's been a general growth in the portfolio of that business, and it's reflecting in the revenue lines. The general insurance business, I think that industry, I think I've mentioned before, is extremely competitive. I mean, lots of small players, very, very price sensitive. We have seen constant compression in the spreads in that business. And I think the flat performance year over year is reflective of exactly what's happening in that industry. I think if you examine that industry generally, you probably realize that there has been a lot of growth in terms of the total profitability of that industry as a standalone. You made reference to the stock split. That's something we have taken a look at. And I think the general thinking has always been that with a stock split, stock prices shoot up, right? And oftentimes people do a split when there is a view that the stock price is so high that it's impacting the ability of persons to buy the stock. The stock is split, and it helps the liquidity of the stock, improve the trading, and the price tends to move up. We haven't analyzed that, and when we look, for example, at the multiples of the NCB stock, it's price to book, it's price to earnings. When we also look at measurements of the liquidity of the NCB stock, meaning the percentage of the stock traded in relation to the total shares outstanding, it is pretty much better than all its peers in all the parameters. So we have no reason to believe there's any benefit to be gained from a stock split. We've also noted that oftentimes in a stock split, that initial jump in the stock price is something that benefits only short-term traders and not our long-term investors, right? The stock goes up, people pretty much buy the stock, they dump it immediately after, and it is not something, that's not a practice that